Chewy just had a great Q1, and yet it's stock down over 10%. Why is that? Well, in this case, I happen to think that the market has just done this to itself. Let's talk about what went well with Chewy. First of all, growth was pretty strong, 240,000 net active customer adds. Then you look at its revenue composition. More than 80% of sales comes from its auto ship program, and the market loves recurring revenue, which is what that is. Add on top of the fact that Chewy is working towards expanding its EBITDA margin, which is a measure of profitability, which is pretty hard to do with these kinds of businesses. Now, this is particularly baffling for Chewy when you take a look at another name in the pet sector, which is Petco. That stock price dropped 23% over this past week, and that was off a disappointing earnings report where its results were just not as good as expected, and there were, quote, sluggish turnaround efforts. Chewy's actually done pretty well, and yet here it is down as well. So what's the issue that's caused the stock to drop? Now, for a lot of other consumer businesses like Lululemon, for example, which we talked about yesterday, a lot of companies have been talking about macro uncertainty and tariffs, and that's been the reason that they haven't increased their guidance, or they've even cut it for 2025. Chewy kept its guidance constant. It specifically told the market, again, it's going to go after 7 to 8% total growth for the year of revenue, and its EBITDA margin's going to be in that mid 5%-ish range. The problem is that the market hasn't listened to the facts. Chewy's share price has more than doubled over the past 12 months, and before earnings, it was trading at north of 40 times a price to earnings ratio, which is a massive valuation for a business that has relatively small profit margins. At 5.5% is not a big amount. But usually you see those kinds of PE ratios for companies with much, much bigger teens plus growth expectations. So where do I feel like I've seen this before? Good earnings that outperformed expectations, and yet the stock was still down. Nvidia. And it feels like that kind of phenomenon, which is the market getting ahead of itself, having unrealistic expectations and unsustainably high valuations before earnings, has now spread beyond the highest tech names to other businesses like Chewy.